traders, Gary Wagner with the Gold Forecast, and this is our daily report for September the 8th, Wednesday. Forex Gold currently trading at 1255.12 and COMEX most active December contract at 1256.80. Traders, as you know, I have been waiting for a pullback to re-enter this market from the long side. If you take a look at the series of trades that I have recommended over the last 6 months, there have only been 2 sells, and there have been, I believe, 25 or 20, 24 or 25 buys. Obviously, I am a gold bull, and I'm extremely bullish on this market. I had been waiting for a pullback. We have not seen that pullback. This market has been unrelentless. It has been moving to the upside. We were fortunate enough to catch the bottom here. We did get out much too early, and we have not re-entered the market. My sentiment is this: if the market is not going to give us an opportunity for a pullback, we might want to begin to accumulate positions on the long side, but accumulate small positions with very, very loose stops. My belief is this: I do not want to get caught where the market breaches and makes these tops and then sells off very hard. 38% retracement, even up in this area, would take it back to about 1220, 1230. So my sentiment is this: for those that wish to enter the market from the long side, we will begin to accumulate positions today, but they need to be small positions. They need to be very, very loose stops. If, in fact, we see a retracement, we will use that retracement to dollar cost average and to add at least 2 to 1, if not 3 to 1, to our position when we see a bottom signal on a retracement, if we get that. This market is so fundamentally strong that it doesn't really want to break. And what we've been noticing is, rather than it breaking and retracing, our profit-taking sessions are taking place with periods like this hangman, where it comes down, dips below 1240, and you get massive buying coming into the market. That buying the dip mentality, and what that does, of course, is then push the market back up. So that we have had this similar activity today. In other words, it went and it did make a new high, as you can see up here. It tested the 1250 area, and at least on an interim basis seems to find support. As I told you, I do believe that that area is fairly critical because it matches this top off of wave 3. I wanted to see a break above that, which we have now had. Yesterday's activity gave us that. We also wanted to see on a closing basis the market close above that. And as you can see, when we got this low today, that low does match that one area right in here. So that we do want to begin to accumulate metals and gold on this breakout. In today's report, I'm going to talk to you about not only positions in gold, but I have been taking a look at the silver market, which I believe might be poised for a major move. And we can talk about the possibility of entering that also. So traders, what I'm suggesting is as follows. We can go in and enter our positions in terms of the gold market. We will enter it from the long side. In terms of a stop placement, though, it's, as I said, it's going to have to be extremely loose, because what I am looking at is if the market hits a heavy round of profit taking, I want to be able to have the margin available to control or maintain those positions without getting liquidated, and having enough money available to dollar cost average if in fact that happens. If it does not happen, I do want to continue to accumulate gold through this area, because my belief right now is that we are going to witness one of the larger surges in history in gold over the next year or so. As I said, I am looking 2 years down the road anywhere between 1400, maybe even 1500. Interim or short term, though, I am looking for it to first test and take out the record tops that we've seen at 1265, then take a stab at 1300. Now, somewhere along the way, there should be a sizable retracement. Paul Volcker used to say, trees don't grow to the sky, they never have, they never will. He was talking about a bull market in the stock market. However, that is true in almost every market. But the one thing that we do want to realize, and if we go take a look at activity that we have seen, for example, when we saw this market first shoot up to this record top here, we had a very, very strong market, and this fifth wave here took us from just above 10.20 an ounce to that record top at 12.21. So in that case, we saw a $200 move on this wave. We right now are looking at a scenario in which the market has gone from, say, 11.55 to about 12.55. We've seen about a $100 move. Wave 3, which took us to that first record top, that was a $161 move. So that the potential for these waves to extend in terms of amplitude and the amount that they can gain are there. They're substantially there. And we could see this market run another $100 in this wave. At the same time, we could see this market at any point come down and retrace. So that, go ahead, we have this doji here, which is that consolidating candle. That concerns me, but at the same time, we have been witnessing that all throughout this area where you get a couple of dojis and then the market just takes off. In other words, it's just a short round of profit taking, unlike the dojis that we'll find at the top. If we're incorrect and this market does trade lower, I do want to be able to hold on to that position though, and I want to be able to profit from it by dollar cost averaging when the market retraces, hits a retracement level, and shows us an indication that the next wave is about to begin, in other words, wave 3. So that's what I'm looking at. So traders, my recommendations are as follows. You can go ahead and enter a long position in the market. Stops will need to be at 1205. That's right, 1205. I want to be able to keep it way below anywhere the market could retrace to. If in fact this doji that we're looking at right now is simply another round of what I'll call a breathing area in which the market consolidates and you get profit taking, and then we get another kind of spurt or move to the upside as we've seen, we can begin to slowly accumulate and build on those positions as we see different bases or different areas in which we find support. Right now I'm looking at this particular area right in here at 1250 as a base. And if it can maintain and hold this, the next level we need to see it break through, obviously, is going to be 1265 right in here. If, in fact, the market does retrace, in other words, if what we're witnessing here is going to be the end of this wave, I want to be able to hold that very, very small position. And as the market comes down, I want to be able to have the liquidity available to dollar cost average, so that, let's say, for example, and I'm just going to put up a quick Fibonacci from here to here. If we simply go, let me put those in so we can see these. 1 second. So that if the market does want to retrace, a logical point would be around 1236. 38% would put it at 1222. I don't think we'll see it go that far, or 50% at 1209. And therefore my stop at 1205, which is far below any of those particular levels. So traders, go ahead, initiate a long position, realize that there is a likelihood that the market will retrace. We have not seen it though. If it does retrace, I want to be able to hold these positions, and as I said, dollar cost average at least 2 to 1 or 3 to 1 on that dip in the market. If we don't have the dip, we can then begin to at least accumulate and build positions on the long side. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow. Bye-bye.
When I look